Hello everyone, welcome to the Ichimoku Charts.com daily analysis for the S&P 500 for Wednesday, June 19th, 2013. Well, a change of trend today and a candle that's made a lower high and a lower low. A relatively large black body candle, and a candle that suggests that the sellers have made a substantial amount of net bearish progress on the day between the opening and the close by opening up towards the high and closing down towards the low. That all suggests that the sellers have closed with very strong control of this market, and that the sellers have been very strongly committed to taking this market lower. Now this is in contrast to the previous 2 days where we had consecutive white body candles, and we had a nice little extension of the body for the previous day's trading. But we did see the market testing within this zone, and I did mention this zone of potential resistance yesterday, and we saw that zone extended up to around this 1662 level because we saw this solid downside price rejection from around this area, and also extended up to around the 1675 region. But the market hasn't found the momentum to trade higher than these levels for today's trading. We've actually seen the sellers come back into this market, and it does raise doubt about the potential for this market to continue. Now, with that bullish candle yesterday, however, we did see the market establish a second time frame downtrend, and if we look here, previously the market was making a series of lower peaks and lower troughs, and then yesterday, as we took out that peak there, we saw the market make a trough, a peak, a higher trough, and a higher peak as we took out this area. So there is still potential for this market to make another higher trough and then continue the uptrend on its way. But not a lot of faith in the market doing that soon, because of the solid bearishness that we've seen with this candle. It is a very, very large black body candle, and this body of this candle is actually taken out the body of the 2 previous white body candles in one go, and it really says something about the downside momentum that the sellers have found. Now, the market has closed roughly around the Tenkan-sen, the green line here, and that may be an area where the market finds potential support. And we also have the previous window here, this highlighted yellow area, where the market could find support as well. But that window has been closed previously, so it really does negate the strength of it to a large degree. An area that we should be looking at for potential support is roughly around this 1610 level. It was a minor swing low based on this trough that the market made in the recent past, and then just below there we have the market trading around the 1600 round number level, and it coincides with the bottom of the the top of the cloud, and that is an area that should provide very, very solid support if we do see this market trade down to there in the next couple of days. Obviously, if the market is going to trade higher, we do have that small zone extending to that area around 1660, and then a larger zone extending up here to around this 1675 level and beyond, up to about the 1687 area. Now, in terms of the Fibonacci extension, and now that we're in a new first time frame downtrend, we're looking at the relationship of that first time frame downtrend to the previous time the market was trending down. And here today we saw the market take out important areas. We took out the 38.2%, the 50%, and we've closed just at the 61.8% level. So failing to close below the 61.8% level may be significant, but if we look at the dynamics in this current candle, the sellers have very, very strong control of this market. They've gained very solid downside momentum, and it certainly doesn't look as though this 61.8% is going to hold up the market. The areas we should be looking for are the 78.6% level at 1622, and that's a minor level, but it doesn't coincide with the lows of these 2 candles where we did see some minor rejection, so let's watch there. But the 100% level becomes very important, and the 100% level is very close to the top of the cloud, so around that 1613 to about 1608 level will or has potential to be very, very solid support for this market over the next day or two. In terms of the Fibonacci retracement, we're now examining the relationship of this new first time frame downtrend to the previous time the market was trending up in the first time frame. And here today we saw the market take out the 38.2% and the 50% in a very solid bearish manner, suggesting that there is potential for the market to trade to the 61.8% that is close by. The 78.6% level is around 1617, and then the 100% level is close to that other Fibonacci ratio around 1608. So very, very solid support around this 1608 and then extending down to the round number 1600 for this market. So unlikely that the market will penetrate that region quickly, but we could see the market test down to those levels for tomorrow's trading. Now, in terms of Ichimoku, obviously still a bullish market in the long-term time frame, with the market trading up above the cloud, and we have been trading above the cloud for quite some time. The market has now closed back down below the Kijun-sen. And for the previous day's trading, we had the market break out above the Kijun-sen on quite a strongly bullish candle. And it did give us a buy signal with Ichimoku, and it did occur above the cloud, so it gave us a very solid buy signal. But as with anything, we shouldn't look at the Ichimoku signals in isolation. We should have looked towards this resistance or the potential resistance in this zone extending to the 1660 level, and decided whether it was a high probability trade to take. And based on the fact that there was that previous very strong price rejection around this region, then it may certainly have made sense to be cautious of this signal. And today we have seen the sellers come back in and close the market down below the Kijun-sen, the pink line, to give us a bearish market in the medium term time frame. Now the market has just closed just at the Tenkan-sen, so pretty much neutral in the short-term time frame by trading or closing around that Tenkan-sen, technically just below, so technically just bearish. So a change of sentiment there, and that does suggest that there is potential for the market to trade back to down to lower levels. As I've mentioned, potential support and mild support down around the 1625 level, but we should see very, very solid support coming in a zone extending from around this roughly 1610 level down to the round number 1600.